Secrets, the channel for learning about trading and investing. And welcome to another brand new episode on the crypto options trading. This time it's intraday option strategy that we're going to learn, right? So I hope you had seen the previous video on the crypto options trading introduction, where we had seen how we can transfer fund into the options crypto trading platform Delta.Exchange, and how we can see the payoffs and do put the trade and all that in a very brief way, right? Today we are directly getting into a intraday option strategies. Now the question is, why do we need to do the crypto options? So cryptocurrency, we can invest or trade in cryptocurrency various ways, just like we can invest or trade in various ways in the stocks that is listed in the stock exchanges like NSE or BSE, right? We can do a crypto currency investment by buying it and then selling it when the price moves up, just like how we do for stocks. Or we could buy in futures using the Delta.Exchange that we had seen, and we can trade that accordingly, right? Just like how we trade the derivatives, right? We buy it when the buy it at a price and then wait for the futures that is based on the underlying cryptocurrency instrument, and then sell it when the price moves higher. But then why do we need to do the crypto options? We had briefly seen this, but I'm just quickly going through once again. Crypto options has got options trading is a double-edged sword, right? If you know how to trade in options in the capital markets in any of the exchanges, right? There's not too much of difference in doing the same in the crypto options also, cryptocurrency options also. Here the only difference is that the underlying would be a cryptocurrency, and there are several different kinds of cryptocurrencies, like BTC, Bitcoins, and Ethereum, and Solana, and there are any number of coins we have seen, right? So that current cryptocurrency would be the underlying, and there would be options pricing platform like Delta.Exchange, which would have option chain based on the underlying cryptocurrency, and then allows us to do speculative trades, right, either intraday or positional, right? So the main thing in Delta.Exchange or the cryptocurrency world is that we can do this derivatives options trading without any holidays, right? So right now, if you see that there is a long weekend, we have 2 days of holidays in a 5-day week of trading, and there's nothing like that. And you don't have a 5 o'clock shutdown or a 3 o'clock evening shutdown of the exchange. It's not there. It's 24/7, and you can trade anytime, right? And there are no holidays, right? That's a big advantage. So all of these that we are talking about is a double-edged sword. Remember that. So unless and until you know how to trade the fundamentals of the options, the concept behind the options has to be learned first before diving into crypto. Options becomes even more sharper double-edged swords if it is done on crypto, because crypto, the currency underlying by itself, is highly volatile. So the first step would be to understand the concept behind the options. So there are several videos in the options. Go to the playlist and check out each of those, and then get a view on that. A lot of videos are available in the YouTube also, which clearly explains the basic concepts behind options, the concept behind options speculative trading, right? Then you have to apply, that's only time when we can come into crypto and do that, right? That is that's the thing. So daily options expiry is there, right? In the normal NSE or the BSE, if you're trading, the expiry is a weekly or a monthly, right? And you have long-term expiry is also available on some of the stocks. So here the options, the daily the expiry is there at 5:30 p.m. every day, right? So the advantage is that it gives a very good time decay. So most of us, who are swing or positions, short-term positional traders in the, using the options, what they do is they will take position on the Friday and Friday, or Monday morning, and then wait for till the expiry 4 days, right? And or exit before Wednesday evening or something like that, right? So here, because the exit would happen only, only on the days closer, because that is when the time decay happens. So here the time decay, is intraday. So that's beneficial. You don't have to wait that long. Right, you don't have to. So it's everyday expiry trading, right? So there is a concept of expiry trading, which happens on every Thursday, right, in the NSE and markets, when we are doing the options trading on the Nifty or the other stocks. So that Nifty basically, or Bank Nifty. So here you have that expiry every single day. So you get the time decay. Every day is an expiry day. So that's a beautiful thing about doing cryptos. Now again, another thing is there is a good premium available, right, if you're entering in the right time. So if it's intraday, you need to enter in the morning itself, then you get a good premium price, right? If you're buy today and sell tomorrow, then you have to enter the previous day. Even you get very good reasonable premium, and risk reward is also much better as compared to the options trading on the normal regulated stock markets, right? You may be aware that by the time you decide to go for an option trading on expiry day, considering the time decay benefits, you would realize that you hardly have any premium left. So naturally, only the who has got a large quantity capacity to buy that, right, would only make money, right? Others would take away a few peanuts, that's all. So the good margin leverage is the biggest thing. Your capital can be leveraged to 25 or 50 or 100 times on and also all the options, multi-legged hedge positions would have its own advantages also. Just like how you are getting the advantage of using an iron code or a fully hedged option strategy, you would have lesser premium. So here, so in NSE and stock exchange, there are restrictions by the SEBI where you get very less leverage. Here you get big leverage, but again, all of these points that we're talking about is a double risk. So you have to use it as per your position size, as per your risk appetite, and a very small, only a very small percentage of your total portfolio. It should be allocated to crypto itself, crypto options, right? It will be a percentage of that total what you're planning to trade. And liquidity was also good. So these are the reasons that we had seen in the last video also. But all of these benefits are reasons enough for a trader who is already doing that on the options, but has constraints on all of these points. Has constraints on liquidity sometimes, has constraints on the premiums that is there for the expiry day, has concerns on the expiry time decay, has concern on not being available at due to full time, due to other jobs that's there, unable to participate, because of not being a full-time trader, and all of this can be mitigated to a good extent, and that's why we have crypto options. So why intraday, right? That's why intraday. Now we're going to get to see an intraday strategy for crypto options trading today. Intraday obviously means we would be entering in the morning, anytime between 8 and 9 a.m. That means whenever you can, you get to work at that time, but not too late, because because the expiry for that particular day would end at the 5:30 p.m. So the earlier you enter, it's better. You'll have got good premium and good time decay benefits can be availed. So morning itself you have to enter, and the strategy has been is suggested to be done on Bitcoin because of the liquidity factors. Bitcoins are most popular and popular underlying, so so it makes more sense to do on a Bitcoin BTC. It's a short form for that. So the first step, so all these steps 1, 2, 3, 4, 5, 6 is applicable for any kind of trade that you do. Any trade that you do, you need to know what is the price, where are we, what's your view, right? We can't just blindly go and buy, okay, come on, I will buy Infosys 1,000 shares today, right? We just don't do that. We just need to know how has Infosys been performing the last 1 week, how is it been performing the last 1 month or 1 year, and then we get a picture, okay, we are in a downtrend or we are in an uptrend, or we are in an uptrend but there is a small pullback. So all these details can be understood not just by fundamentals, but you need to know the technical charts, right? You need to know how the price is behaving before we jump into and then do that. So when it is intraday, you need to look at the daily charts, right? And you need to look at the lower time frame charts like 15 minutes or 1 hour and all this, depending on how you are trading for any other option. So normally 4 hour charts or 1 hour charts and 15 minutes, everything works, right? So pick a multi-time frame analysis. In the sense, right, you need to understand the charts, you need to understand the price and how it is behaving, not just on a high time frame alone. You need to know how is it performing in a shorter period, 1 hour, or even shorter period of 15 minutes. How is it performing? Then you get a picture on, because you are doing intraday. When you are doing intraday, you need to know how is it the last 5 minutes, how is it doing, last 15 minutes, how is it performing, right? So most likely when it is performing on a higher time frame better, right, there is every likelihood that the lower time frames also tend to follow the higher time frame. That is a fundamental of multi-time frame analysis. And why do we need to know the multi-time frame analysis? Basically, we need to have a strike for us to do the trade, right? We need to buy an options or sell an options. Here we are going to learn about the intraday options, crypto options selling strategy. So you need to first know what strike price I am going to sell. Am I going to sell a call option or a put option, right? What strikes? So what strikes can be answered from the charts, right? So for doing that, basically several techniques can be used, right? So what I am going to show is one example of that, but there can be n number of ways where we can find support and resistances, right? I'm not going to do too much details on how the support and resistances are found, because that's outside the scope of the video, and you can learn that if go to the playlist and then go to technical analysis section where there are videos. If you have not seen that, check out that and then come back. Similarly, options also, see the options videos before getting in. So learning how the technical analysis has to be done and learning all about the concepts behind the trading is options is very important before we dive into doing it on a crypto. So now, support resistance can be found from trend line, using pivots, using moving averages, using parabolic SAR, using super trend, or n number of tools at games. So everything works basically. So I'll just quickly show you one sample of how it is done. So this is a multi-time frame analysis of a BTC crypto, right? BTC USD, right? So on the further rightmost chart, what you're seeing is a daily candle, right? This can be expanded here. This is investing.com, a free charting tool, right? So you can see that there is a sideways movement that is happening from the Bollinger Bands moving. From there is a small uptrend that has happened now, but that seems to have ceased, and then there is a trending downward move that is basically happening. But there is some kind of support that we are seeing here, and there is a bounce up that has happened. But the last day today, you can see that there is some selling pressure, and there is a lot of selling pressure near the 41,500 levels. Now we got the picture on how the Bitcoin is performing overall. It's a downtrend and a bounce up from the supports, which today not that great. Means feeling the pressure of the selling. That's how it is. Now look at the lower time frame. What you see is a one hour time frame. On a 1 hour, there is a volatility skews that's happening. There is a moving average, and you can see that it is kind of consolidation that's happening since last many hours. But you have good support. So parabolic SAR is used. I'm using it for support resistance, right? And the 15 minutes, right? Go to the 15 minutes. You can understand that here also some kind of consolidation is the range bound, right? So you understand what the price movement is happening. On the 15 minutes, it is hovering between 41,000 and 41,500 for the last several 15 minutes. Right? That's what is happening. So what a picture. So basically, in the morning I would look at the parabolic SAR bottom and take a level. Right? This is saying it's 4,800. So I would consider 4,800 as a strike price. And what would I do? So I know that the trending upwards movement is what is happening, right? So I understand the market is moving up, so I would sell a put. The market is moving down, I would sell a call options. When the market is trending down, I would sell a call option, and the market is moving up, I would sell a put options. Right? That's a basic fundamental. Or you can go for the buy options, but options buying and option selling is several advantages and disadvantages. So most of the time what works when you have a sideways movement is what option. That's option selling. Option selling has its own benefits. We're not going to do that theory of that, but I'm going to sell a put option because I feel that the market is moving up, although lower time frames may be sideways. So eventually the market is going to move up. So it makes more sense to sell it. Right? So 9 o'clock I would find where is the support on the 1 hour and then sell a put or a call depending on my view. So this is what is mentioned here as my view. Right? Here I showed you how I am using parabolics around 1 hour to get the strike price. Right? And I framed my view. Right? So my entry signal is second. Right? Call or put is already decided. Step 3 is decided because I know I'm going to sell put because market always and option selling strikes I already known 40,800. I already identified because that is where the support. Breach of that would mean trend reversal probably. Now, second step is wait for the entry signal. That's up to you. So in the morning, you can. So if you are selling a call option, you can wait for this parabolic SAR point to be breached or this super trend to be breached, or you can wait for an entry when this. If you are selling a call option, then you can wait for this super trend to be breached. Or if you are selling a buy option, you can wait for some resistances that is there upside which is breached. That's up to you. How you understand. So probably you can say. So this is a fine. So what you see on the left side is the BTC 5-minute chart. You can see that 41,300 has got a resistance because there is a parabolic SAR upper point there. Right? So let's say you will enter it only if it is above 41. Right? So that is your entry signal. So the moment 41,300 is breached, I would make an entry. That is what is meant by wait for the entry signal. Right? So that rules are based on it's your own. That cannot be taught. Right? So basically, you need to find a support and resistance using any of these techniques that we have shown in the morning itself. Find the strike prices. Find whether you have to sell a call or a put, and wait for the entry signals or directly jump as per your rules. Right? The rules has to be based on how is your view. The market is going to move up or down. Right? Because you have to understand that this is intraday. So you have only few hours. In the next few hours, what is your view? What do you think the market will behave like? It will go up, go down, stay there. Where will it stay? We have found that, and then accordingly. So always go for option selling strikes which are OTM, not at the ATM. Right? We are selling strikes at the So if you are selling the put options, you have to sell it. OTM out of the money, and if you are selling calls, you sell out of the money. Right? So you get a buffer. Now, second step is the position sizing. Right? How much you have to buy. You identify what is the strike. You identify whether you have to sell option call, or option put. Now, how much to sell? How much to sell can be identified. Yeah, ignore what this position is. It's a sample push, demo that I had put in there right now. So I had shown you how to place order and all that earlier. So basically, you need to see first, in the Delta.Exchange where you are, the option change will be displayed. Some kind of slowness that you're seeing for some reason. I'm not sure why that has come in. And that's strange. Yeah, so this is option strange. Sorry, this is option chain of the BTC, and you can see here left the different expiries can be selected. So I select that particular day. So today is 14th, I selected 14th. So all the option change details of the 14th will come in. Now we had decided that 4800, right? 4800 is here. So right now if you take that position, you don't have any premium, because you are supposed to have taken that in the morning itself. Now it is 2:30, it's almost near, very close to the expiry, so we don't have premium, so we can't take it now. I already taken that. So after I had supposition that I had taken in the morning today, just demo was 41,000. That was where the supports were seen as per my view on the charts, and I took it at 42. And another thing that you have to so when you are placing the sell order, right, you have to select this margin type. So here you select the leverage accordingly, right? So if you want to sell more quantity, right, so here we will say insufficient balance. So you can increase the leverage, right, and you will get the you will get that required. So if you confirm that, it will allow you to. I don't have the capital that is put in there. So once it is there, so this is the place where you decide the position sizing depending on what capital is available for you, right, and depending on how much quantity you want to take. It's automatically, it will display whether it how much is the, and you have to also put the profit and stop loss, right, and the stop loss is say, right. So how do you put a stop loss? So one way to put that would be using the charts or a fixed stop loss. So I always use for a, there is some issue on the charts that's seen currently, so I'm not sure what is the issue, but something wrong in the options chart. But otherwise you should not take ideally you should not take a stop loss that is higher than twice the premium that you're paying. So here, for example, I had paid 42, so my stop loss would be 84. I would not take a risk more than 84. So the moment the option price goes to 84, I will quit, right? And how much leverage I can decide by choosing the leverage option, and which will automatically display for that stop loss. Some issue that is happening. See, so I'm taking 25 quantity, right, and the best bid price is 4, right? So I let me choose another strike so that is clear. Another strike where it has got some price, some value. Suppose I am choosing this. So I'm choosing the strike. It's not the strike that we had talked about earlier. The strike is 41,000. Suppose I sell 41,000, right? I get the best bid. So I know that 41,000 strike, if I'm trying to sell a put option, it is costing me 26. I want to take 15 quantity of that, right? But so that's how you take it, right? So you put the cut. So right, it will exactly automatically show you what the details here. So this is the place where you do the position sizing. So how much leverage that you want to take, right, depends on how much capital that you have and how much of extra. You want 25 times of that, so it will automatically calculate that and display here. And you have to always go for a bracket order where you are going to put the stop loss and the target. So basically I'm not able to show you the chart of the options change or the particular strike of the option change for some reason, but that can be seen here very similar to how you are seeing here, right? Always put it a rule that you not put a stop loss which is more than twice of what is the premium price. So that is what is step 4. Last step is to place the sell order. We had seen how to do that on the last video. And third would be exit the trade. It automatically happens if the bracket order, the target is hit, right? You can exit. So for example, right now this is an order that's already then showing the open positions, right? I want to I want to change the stop loss from 7 to 8. No, I can do it. I want to change this stop loss trigger price. Book the profit at 7. No, when something that was bought at 42, I want to exit at 7, right? With the limit price of 8. No, so between 7 and 8, when the price comes, it just takes the profit. No, or if it is moving against me, no, I put a stop loss. I can put whatever stop loss and limit price what I want. So I can edit that also once it is priced. So that is all done on the right side. No, I'm not demoing the tool as such, but yeah. So this is the chart. No, this time the chart is coming. So normally when you're putting a order, automatically these lines will come in here, which will say so my stop loss is 72 and my entry is 42. It's very clear. So if I just drag and move it slightly, it automatically updates the order. See, the order is updated, right? So I can move around with the very easily from this chart. So this was not displaying earlier to some reason. So that's all. You have the charts where you can trail the stop losses to to benefit, and also you take the leverage in when you are selling based on the margin type that is selected, right? And always put a stop loss order and update the order, in order to trail or get out early, right? So that is where so we had seen all this in the last video also. So that is what is mentioned here. So that's a step. So I'll just wrap up once more. First step would be to look at the technical charts and find the overall view on how the market is doing, how the underlying is doing. Right? This is the underlying BTC. Now once that is done, then you find a support level or a resistance level, depending on whether you're selling a call or selling a put. Right? Find the strikes depending on the technical analysis on the various techniques can be used, and do it in the morning to get the time benefit. Fourth step is position size inside the exchange itself, depending on what leverage that you want to take, and then sell the place order and track it, and then use the Delta.Exchange option strike charts particularly, not the underlying chart that we had seen for the entry signal, right? Use the use the options chart and then trail it or exit early, depending on what how you want to take. So right now you can see very clearly a trade that is going on where I am benefiting 1.68 USDT, where the strike price is 42, where the exit is 7, and profit booking is at 7, and exit stop loss is 71, right? And you are seeing the option chain chart, the options chart, and the underlying chart for the entry signal, right? You are seeing. So that is exactly what I wanted to show. This is an intraday strategy. So option selling strategy, you sell a call or a put depending on your view on the charts, depending on your quantity and as per your position sizing and leverage, and then execute that every day in the morning. So normally you benefit within 1 or 2 hours. So every single day, right, with a very small capital, you get a benefit every single day because of all these points, that advantages that we have, right? Because of the time we get benefits every single day. Morning entry, within few hours your trade is closed and you benefit from it, right? I hope you enjoyed the video, and you got to learn, and you just have to try it hands-on with as little capital as 5,000 or 10,000, right? That's the beauty of crypto, right? Don't risk your capital more than 1% of your total portfolio, whatever it is, for any reasons, right? And this is a great learning place for for trading in options, right? Hope you like it. Please subscribe and share to your friends so that maximum reach is possible. Thanks for watching. Happy trading, happy learning.